And guys, that was an in-depth look at the Robinhood IPO that is happening next week, July 29 on Thursday. Welcome back, IPO nerds. My name is Jose, and today I'm here to tell you that the wait is over. Absolutely, yes. Robinhood has announced that they are going public. This is going to happen next week, Thursday, July 29. So stay tuned. We're going to go over everything you need to know about the IPO because this is the IPO nerd.
No, what are you waiting for? Do it!
Now, I wanted to cover a different company this week, but I see all the other channels, all the big channels, even the ones that I don't not talk about IPOs normally, talking about the Robinhood IPO. And this is justifiable because there are so many users out there that are using Robinhood to become first-time investors for the first time. And Robinhood is part of the reason why I started investing myself 2-3 years ago. So with that being said, make sure you grab your monster for the day. I got my orange one here. Very good. This one's called the Ultra Sunrise. Take a sip. Ooh, and let's go down this rabbit hole, shall we? All right, so the first thing I want to look at is IPO scoop, right? And right here you can see that Robinhood Markets Inc. ticker symbol is going to be HOOD. They're going to be offering shares at around $38 to $42 per share on July 29, Thursday. Okay, so make sure you mark your calendars. Robinhood has 18 million accounts with 80 billion in assets after rapid growth. I do have the S1. We're gonna go over it, so make sure that you don't go anywhere because we're gonna go over all their financials so you can make an informed decision if you should buy or pass on this Robinhood IPO. Also, Robinhood warns retail trading is slowing down, especially in cryptocurrencies. I'm gonna show you how their market is divided into different cryptocurrencies, how much money is coming from options, and how much money is coming from stocks and all the other good stuff. And last but not least, we're gonna look at a video over here from the Wall Street Journal. All right, so last year in March, Robinhood was managing around $19.2 billion in assets, guys. This year in March, they are managing over $80 billion in assets. That is insane growth. I was watching Marco's whiteboard finance video, and he described that 1 in 10 people in the US have a Robinhood account. That is insane growth, guys. And despite what you heard, Robinhood was actually profitable last year, generating a net income of $7.4 million in the last quarter of 2020. However, the brokerage had lost $1.4 billion in the first quarter of 2021. We're gonna look at the S1 to see why that is. I believe all these are just warrants. Here's something all other YouTubers are not covering about the IPO. Robinhood plans to allocate between 20% to 35% of its IPO shares to its retail customers. So out of those 55 million shares that they're going to be offering, guys, only 20 to 35% of them are going to retail customers like you and I. Robinhood was founded in 2013 by CEO Vlad Tenev and by Bhatt. Now the company has 2,100 full-time employees. Now here's a quick video from the Wall Street Journal that dives into Robinhood's upcoming IPO. But before that, a quick shout out to my patrons. Your generosity and contributions allow me to do what I love to do and keep the channel growing, so thank you. If you want to become a patron, there's a link in the description.
Trading platform Robinhood.
One of the most highly anticipated IPOs of the year.
That's a big deal for the retail investor, but it could also come with some big risks.
Last year, millions of investors traded on the brokerage app Robinhood. They were part of a trend. Since 2020, individual investors bought billions of dollars in equities, driven by the rise in no-fee trading apps, with Robinhood leading the way.
We believe that the more people that have access to the markets and can start investing earlier, the better off our economy will be.
After a year of dramatic growth, Robinhood filed for its IPO on July 1st. But the filing comes as the brokerage faces a collision course with regulators, including a new Securities and Exchange Commission chairman, over a controversial practice that Robinhood uses to generate most of its revenue. Here's how Robinhood went from startup to IPO in less than a decade, and why it's facing so much turmoil as it gears up to go public. In the 90s, brokerages like E-Trade and Ameritrade started offering online trading services, which helped open up the stock market to retail investors. But it was expensive. Trading fees could add up to hundreds or even thousands of dollars a year. That was the case until 2015, when Robinhood released its trading app.
From the very beginning, our mission has been to democratize the financial system.
It was one of the earliest brokerages to offer no-fee trading. It was also a pioneer in fractional share trading.
So suddenly you could buy $10 of Amazon or $50 of Amazon. You could just buy basically a slice of that stock, and it just made it much easier for investors to access the market in that way.
But price wasn't the only thing keeping retail investors out of the market.
So it was just really intimidating to try to trade and to try to figure out charts and to understand what was happening in the market.
Robinhood also experimented with features aimed at keeping people engaged. When users would log on to the app and place their first trade, it used to rain confetti. Stock numbers turn like slot machines. And some of its messages to investors use emojis. Robinhood's user base grew quickly, which caught the attention of its competition. By 2019, major brokerages like Charles Schwab and TD Ameritrade had adopted zero-commission trading as well. And then, in early 2020, the COVID-19 pandemic took hold of the world.
We are looking at another day of extreme volatility. Stocks opened just moments ago with the Dow down more than 600 points.
I think with the market volatility, a lot of people said, I think this is a good time for me to try to get into the market. And that's where we've really seen this explosion of activity from individual investors ever since.
According to its IPO filing, Robinhood counted 18 million users with funded accounts at the end of March 2021. And the brokerage's first quarter revenue more than quadrupled to $522 million. But as Robinhood has grown, so has criticism that some of the app's features, the very ones that help make it successful, could cause problems for inexperienced investors. Critics said that the app's interface, which made it fun and easy to use, actually gamified trading and put inexperienced investors at risk. Over the past year, Robinhood has also faced criticism over how it makes its money and how it previously communicated that with investors. In December 2020, Robinhood agreed to pay $65 million to settle claims that it didn't sufficiently disclose its business deals with high-speed trading firms. And then there was GameStop.
Outrage erupting in this wild and expensive battle that's playing out between Wall Street heavyweights, small investors, and these popular stock trading apps.
In January 2021, Robinhood came under scrutiny after it restricted users from buying GameStop as the company's share price surged. The trading blackout caused some investors to lose out on potential gains. About 50 class action lawsuits, investigations by regulators, and multiple hearings with members of Congress followed. According to Robinhood's IPO filing, the company made around 81% of its first quarter revenue from this practice. Payment for order flow has raised red flags with the SEC's new chairman, Gary Gensler. Gensler is reviewing payment for order flow, which could have implications for the future of Robinhood and no-fee trading in general. Robinhood has faced other regulatory issues as well. In June, the brokerage agreed to pay nearly $70 million to resolve allegations that it misled customers, approved ineligible traders for risky strategies, and didn't supervise technology that failed and locked millions out of trading. According to its IPO filing, Robinhood continues to face a number of regulatory inquiries. Still, some industry veterans say Robinhood will survive the SEC's review, even if regulations are imposed.
You can buy the Robinhood IPO by going to IPO Access on Robinhood and clicking on Robinhood Markets. Right here, they'll let you put in the number of shares, and you can either buy it by price range or name your price. Kramer says that the Robinhood IPO will be a test for the real craziness of this market. I believe this thing is going to fly off the shelves. All right, so let's look at Robinhood's total revenue for 2021. According to the S1, they have $522 million in revenue. They are showing a net loss of $1.4 billion, as I mentioned before, in 2021. They have cash and cash equivalents of $4.7 billion. So that's quite a bit of money on hand. Now, Robinhood has 18 million accounts that they are managing, 17.7 million monthly active users, $80.9 billion in assets under custody, and the average revenue that they are making per customer or per user is $137. Now here's a breakdown of the $80.9 billion in assets that Robinhood manages. $65 billion of that is coming from equities. These are stocks, right? $2 billion of that is coming from options. $11.5 billion is coming from cryptocurrencies. $7.6 billion is coming from cash held by users. Now here's a negative number. This is the margin that they are lending to users, $5.4 billion. And if you add all these numbers up and subtract that $5.4 billion in margin that they are lending to their users, right, you get the $80.9 billion in total assets that they are managing. And guys, that was an in-depth look at the Robinhood IPO that is happening next week, July 29 on Thursday. So make sure you mark your calendars. Do not miss it. What do you guys think? Are you going to invest in Robinhood? I know that they have a lot of litigation going on, a lot of things happening with the SEC, but they've been given the green flag to go ahead and go IPO. So I'm hoping that they do well. I'm probably going to put in some bits in, maybe grab me a couple of shares. I don't think the company's worth $50 per share just looking at the numbers, but it's not all about technical analysis, right? It's about future promise and what people think the company is worth. So if you can buy a couple of shares for $50 and flip them for $100, hey, you made a profit right there, right? But hey, guys, I'm going to give this one a big thumbs up because who it is Robinhood. And you do not want to miss this one, guys. But hey, of course, that's just my opinion. I'm not a financial advisor. This is not investing financial advice, guys. So make sure you do your own research and let me know what you guys think in the comments below. As always, guys, if you like this video, make sure you drop a like, subscribe to the channel. But more important than that, baby, make sure you take care of yourselves. And I'll see you soon.
I bring up the pain, Rickosaurus the main. I make the market rain like acid rain. An investing channel you ever known, ya. I think you'll go your house, your money, leave you broke, son.